that remembering these two formulas, because you can always use them alternately. Then we are looking at CVP analysis, cost volume profit. And I told you cost volume profit brings you the break-even analysis, the break-even point analysis. So what do we mean by break-even point? So break-even point, because you already have it, just always make sure you remember that the BEP is a major concept in this area, and an examiner setting exams from this area will always test on it, break-even point. And we already have some background knowledge of the formula, and we know that whenever you do break-even point analysis, you will be asked to compute break-even point in units and also in shillings. So I want to start with units. How do you get break-even point in units? You know that this is total fixed cost. You will take your total fixed costs, then you divide by contribution margin. We already know how to do contribution margin. That's what you've done up here. So with that knowledge, you will use that, whatever you've computed here, to get your break-even point in units. Those are important things that in this area, if you cannot master them, then you might face a problem. So I want you to check on it very, very well. Have it at the back of your fingertips. All right. So after that, we look at the break-even point in shillings, which also examiners love bringing. They love bringing that. Break-even point in shillings. Break-even point in shillings. They will always test you on that if they want to set something from this area. So break-even point in shillings, the numerator, we normally retain it. Total fixed cost normally we retain, but now it's the denominator that will change. Instead of contribution margin, we will now use contribution margin ratio. We will now use contribution margin ratio. So the question is, how do we get this contribution margin ratio if we already know the contribution margin how to get? So this is now a ratio. So contribution margin ratio, how do we get it? Contribution margin ratio, you get it very simple. You start with the contribution margin, which you already have. If you are starting from the first part, then you divide that by revenue. You get your contribution margin ratio. And this contribution margin ratio can always be expressed in two ways also. And contribution margin ratio, sometimes you can use initials, CMR, to denote it, contribution margin ratio. So you can either get it through this contribution margin divided by revenue, or you can express the same in a different way, where you will say it is total. You know that when you talk about total fixed cost, you know very well cost has two elements. Yes, total fixed cost, you know that cost has two elements. And when we talk about contribution margin, we already have up here, and we know that contribution margin is total revenue minus total variable cost. So you can decide to bring the formula of contribution margin as the numerator, and then we come to the total revenue. And I want you to remember that. And we talk about the total revenue. That's why knowing the alternative formulas of contribution margin is important. It will help you whenever you're working with revenue. You don't have to scratch your head so hard. When you're working with totals, you will not go to the per unit variable cost. All right, minus, I will just use initials for total variable cost, TVC, and whatever you get from this one here, this difference, you divide it. Whatever you get here, you divide by the total revenue. Total revenue. Let me just type that one so that it looks organized. All right. So those are few areas that I want you to check on. And remember, whenever an examiner will set a question from this area, sensitivity analysis will always kick in. They will always want to test you on sensitivity analysis using the same elements. And like I've said, though I did not type it, but I've said that total cost normally is the total variable cost plus total fixed cost. That also will form a basis. When you're doing cost estimation in regression analysis, you will apply a lot of this one here. And of course, we already know that profit will be the difference between total revenue and total cost. So now that you know how to get total cost, you can always work with around those elements and have your figures there. All right. So you know very well when you talk about break-even point, just remember that at break-even point, you know that there is no profit, there is no loss, meaning the total revenue will be equal to total cost. So at that point, total revenue will be equal to total cost. That's why we talk about no profit, no loss. No profit, and no loss. That is important to remember. All right, so with that very few reminders there, I would want us to look at this question and see what was expected of you or of the students who sat that paper. Very simple section. And those elements, once you fully covered these areas under the CVP analysis, you have nothing to worry about, members. That's all you need to know about CVP analysis. So let's look at the application. August 2023, question number 23. We'll look at it together. All right, so I will read this question. I will start. I believe my screen is visible and I'm audible enough. The question reads, Delamere Limited would like to evaluate its performance for the next 5 years. And this one is starting from the year 2023, and it is based on some revised strategy of this company. So the details have been given there, and they relate to a main product. And this main product, they're naming it Lotus. And then they're saying that they have some estimated changes in prices and cost. So remember, they want to do evaluation of performance. And this evaluation is supposed to start from 2023 because they have a strategy. There is a strategy, members. These people, they want to see how will our estimated changes affect our performance, because they have a strategy already. And that's why they're using the word estimated changes in prices and costs. Estimated. We are doing cost estimation. Now, we have details provided. And this estimation or the performance evaluation will start in 2023. Of course, that is the year whose details are provided. And for how long do they want to do this evaluation of performance? They've told us it is for 5 years. For the next, the word is next 5 years. Next 5 years, meaning our 5 years will start from 2024. So, understanding the question is important because it will help us to take off easily. All right. So, we have the details and you can see them. You have the details there. We have average annual demand in units. We have selling price per unit, direct material cost per unit, direct labor cost per unit, variable production overheads per unit, fixed production overheads, administration overheads, variable selling and distribution cost per unit, then finally, fixed selling and distribution cost. I know when someone reads about these variables and, the overheads, someone is already thinking on how tough management accounting was when you are asked to produce or maybe to do a production account, manufacturing account, manufacturing account where you talk about overheads and you want to compute all those elements to come up with the statements of the manufacturing accounts. Very problematic to many students. But here, what we are doing is now the very simple side of it, application. Required to prepare the forecast statement of profit or loss given the current projections. Look at the 10 marks there, members. That is free marks. 10 marks. This is very free marks. If you get a question like this, not necessarily exactly the same as this, but a question asking you to do some forecasting. As a student in these our sessions, I don't think you should have a problem. Such free marks should be, you should be just smiling as you do it. This is 10 marks, members. Then the question in MA as a comparison section is 20 marks. So even if you have no idea on how to do these others, I'm assuming you didn't step into a management accounting class, but you did advanced exam. You just did part 1, which we've already done. This first part of the question do not require management accounting knowledge because it is a very simple concept. Now, let's see how to do it. I want us to start with part A before we go to determine the break-even levels in units and revenues, and again, using graphs, which are a very interesting area. Now, let's see. We want to do, yes, I mean, this is a free mark. I mean, this is a free mark. Just doing forecasting. Now, let's see how free it is. I want to show you how free it is. You see, when you get this one here, you don't have to look at any concept because you already have the growth rates. You see the growth rates given? Very simple. And I told you, members, I remember telling you, whenever you have growth rates, you have 2 approaches and you do not even have to struggle converting. You don't even have to struggle converting the decimal growth rates given back to percentages. You don't have to stress yourself. You can work with them the way they are. Or you can highlight them the way I've highlighted and click on the percentage sign and you have them all in percentage. So they are all the same. Whether you work in them using the decimal side or you convert, you're still okay. Now, I want us to see how free this question is, how free the marks are here. And in fact, I don't want to go very far. Yes, I know I'm doing my workings on this end, but I want us to start doing the forecasting using these growth rates. And using the growth rates, it becomes very simple. What I want to do, let me push these ones aside a bit. And in fact, what I need to do, let me just create some rows here, some columns. I want to use this area to do the forecasting. I highlight it in yellow. Now, we are told that we are doing forecasting or performance evaluation for the next 5 years. So we are in 2023. The next 5 years will start from which year? The next 5 years. And I would ask, are we treating 2023 as our first year? Or we are starting from 2024 using the language the examiner has given us there? This one is interesting. I want you to look at the language. Jaden is saying we start 2024. Kaflozi is saying 2024. That's a very interesting name. All right. Kaflozi. Interesting. During my time, I could have named my child this one. Just that now, I'm very old now. All right. Steve-O, 2024. Somebody say 2023 base year, Vayo. All right. Winnie, 23. Pataki, 23. Realme, 24. All right. I see we have 2 views here. We have 2, we are having 2 options here. Members, others are saying 23, others are saying 24. Now, no. No. My friend, Jaden. Hapana jaribu. All right. Now, look at the language here. Delaware Limited would like to evaluate its performance for the next 5 years. And I want you to underline this word, commencing from. That's a very nice word to check. Commencing from the year 2023. Members, our projection or performance evaluation or forecasting starts from 2023 because that's where we are supposed to commence. That is what the examiner is saying. It can be easily misinterpreted that you are supposed to start from 2024. But using the word commencing there, that's where we are commencing from. If commencing was not there, then the language was just that for the next 5 years, and it stopped there. So for the next 5 years, based on the company's revised strategy, you would automatically start from 2024. But if they went ahead and added this commencing from, then we have to commence from 23. I believe, members, we are getting that. So 23, 24, and this is for 5 years. So if we start from 23, we will stop at 27 because that's the 5 years, because that's where we were told to commence from. Yes, so look at the language that the examiner is using. If you don't get it right, you can easily misinterpret and give answers that are not very important for the examiner to give you scores. Now, forecasting, we've done it, and I don't think there is someone who will have a problem. We are growing the figures and our growth rates are in positive. So why should we worry? Open a bracket, 1 plus. I'm referring to this, and because now we've done this severally, there is no need of doing all this, all these growth rates line by line. We are going to set a formula in this first line, and we autofill for all the rest. Yes, we're going to autofill for all the rest. Very easy. All right, so after referring to that growth rate, what locking am I doing? Am I doing absolute reference, or am I doing partial locking? And what am I locking? Am I locking a row or a column? Yes, we have done this, and I expect an answer here. Right, Nathaniel is saying lock column H. All right, thank you. Gracie, partial column, thank you. Oppo, partial lock H. Members, we all understand, and I agree with the members who have contributed there. Thank you, guys. We are locking the column. We are not locking the row. Why are we not locking the row? We expect when we autofill the formula, it should pick from row 11 to row 12, all of that, and apply the growth rates there. So I'm simply locking column H by introducing a dollar sign. Dollar sign is in your key, written number 4. You have your keys there, 1, 2, 3 on your keyboard. So the key number 4, shift 4, that is a dollar sign, or you can use F4 and delete the row reference, the row 1, so that you remain with the column being locked. All right, I close the bracket, and what am I growing by that figure? I'm growing this figure, average annual demand in units for 23. I'm growing it like that to 55,000. So once I've done that, once I've locked this column, so meaning even when I autofill, it will not move past that. So what I'm doing is very simple. I will autofill to 2027. And once I do that, with the same highlighting, I will now autofill downwards. The reason why I was saying this first one was 3 marks. Yes? Now, once you do that, that is the first step. Just put that comma style. And you see, you've already done your forecasting for all those figures. The only thing that is remaining is for you to come up with this statement. And I hope that all of us are okay with that. That's a very simple start. Then we now use the same information that we have. You see the information here. These informations, the demand in unit, selling price per unit, direct material cost. Now, let us prepare a statement, and we are basing our argument on these concepts. Remember, we are doing break-even point analysis, where we are looking at the relationship between cost, volume, and profit. We know we have costs here. You've seen we have costs here. We have units. We have the selling price per unit. And we have this cost, direct material, direct labor. These are cost elements. And we know what cost does to revenue. We have even fixed costs here. They've given them different names, but it's basically cost. Yes? Distribution, variable selling and distribution. Fixed selling and distribution, members. Really, that's a very simple concept. So we come here and now draw our statements to do the forecasting for that 5 years. And we are doing forecasting for the years 23. That is where we are commencing. We go to 2024 like that. Then all the way to 27. All the way to 27. And I put them in bold like that. So let me just pull these writings here onto this end so that our workings remain on a clean page like that. Now, remember, we are doing performance evaluation. We are doing forecasting. There is a strategy. This company has a strategy. And the strategy of the company is to try to evaluate that if we expect these changes in prices and costs, these are the changes we expect in prices and costs. We've already come up with them for the next 5 years. Now, how are we looking at expectation what are we expecting to have? Because we are evaluating so that we get to see, are we going to realize a viability in this, our investment? Is it viable or not? But now, because we are not doing project evaluation, the one in FM, we are just doing, in terms of break-even analysis. And we want to see our revenues. What contributions are we having? And what profit are we going to have? What profits are we going to have given these changes in costs and revenues at the end of the 5 years? We are doing projection. There is a strategy. Now, we start by, because we are doing cost estimation, what are the expected revenue or expected sales? Because we expect these figures to change. And that's why I'm using the word expected. We expect some change. And I can see there is some formatting here which is not interesting. Let me put it back to 12. Okay, font is okay, no problem. Now, what are the expected revenue or expected sales for the 5 years? We already have the demand in units. We already have selling price per unit. Now, we know what makes up sales. Yes, we already know that sales is made up of the units and then the selling price per unit. Now that we already have them, why do we need to struggle so hard? We'll come here, and I'm seeing some member saying something, a bit confused on when to lock the column and row. Oh, user, you don't need to get confused, because the reason why we locked this column is because this column is remaining constant. The column is not changing. Yes, and if I activate my demand in units in 2024, you'll see that the reason why I locked this column is because I wanted to drag to autofill. You really don't have to lock it. No one really forces you to lock it. And if you don't lock it, the only thing you're doing, your answers will be correct, but you're just making your work difficult. That is what it really means. Because if you don't lock, what you'll be doing is you'll be coming here, and I'm assuming we did not lock that column. I'm assuming you did not lock it like that. When you want to go and get the units in 2025, you will try to drag that formula, and what will you get? You'll get 55,000. You know what 55,000 mean? It is the same one in 2023. Why? If I activate, you will see it as referenced on an empty cell. Why? When you drag, Excel moves automatically with that pattern. Again, if I drag to 2026, what will it do? It will only bring me the same 55. Why? Because it is referring to an empty cell. We are growing 50,000 by 10% on an empty, without any rate. So the rate is zero. Growth rate is zero, because this is an empty cell, a blank cell. So this is what will happen when you don't lock. And I'm assuming that you are very keen. I'm assuming this person is very keen and very serious. Yeah? Some people are very serious when doing these things. And yes, their work is hard, but they're very serious and they will not make a mistake. Now, for that person, this person will make sure that when you come to 2025, this person will still refer to the same. So this person will come here and go and refer to this. Then you get the correct answer like that. Then the same person will go to the next element, 2026, and do the same. We'll make sure that but yes, you are correct. But how long will you need to do that? You get? So that's why it is easier when we simply lock this column. When we simply lock it, it will make our work so easy at this point, so that we don't have to really hustle so hard. Once you've done that one, then when you autofill, it will pick the correct elements, because you will see all of them will refer to that cell, that column that you locked, even though you've not locked the row. And the reason why we are not locking the row is because we want to autofill again, going down the same way we did, to make our work easy. You don't have to. If you're that fellow who wants to take each step one by one, please, you can still get the correct answers and you'll get your scores. The only thing is, if you don't budget well with your time, you might not finish. Time might cut you short. So why do you make your life difficult when there are provisions to make it easy? Yeah, so I believe now you understand why we did that. Yes. Admin is asking, why have not forecasted from 2023? I don't understand what you're asking. I don't understand what you're asking. All these forecasting that have been done, they refer to 2023 figures. Can you see this? All of them refer to what is in 2023. All of them, because this is where we are starting from. And we are subjecting the changes all the way to 2027 based on what we have already been given in 2023. From my understanding of maybe what you are trying to ask there, right? So Mika is asking, so when do we lock the row? When do we lock the row? Now, Mika, you lock the row if you are not interested in autofilling downwards. If you're not interested in that, then you lock everything. For example, I'm assuming you wanted to grow this and you've referred to this and you now do full locking using F4. You see, when you use F4, you are locking the row and the column. You see, column is H, the row is row 11. Once I've locked that, I will get correct answers for this line. Yes, I will get correct answers, but I may not be able to autofill downwards. I want you to see what happens when I autofill downwards. What are you seeing? You will get those figures like that because I've locked the row. Now, let's get to see the selling price per unit for 2024. I want to activate the formula and you see. It will refer to the growth rate in 2020, the growth rate which was the first growth rate for this item of units. But growth rate for the selling price is 5, not 10. So that is when you fully lock. Yeah. So when that happens, you are not getting the correct selling price per unit. So you have to come here and refer to the correct growth rate. You see. So that's why we have to apply the partial lock, which we did, so that we get the correct figures. We get the correct figures like that. I don't know whether I've interfered with my figures. I'm just confirming. I think they're okay. I think they're okay. All right, like that. So members, let's move. Let's move. Thank you. Very good. I like it when someone has a question and you get to understand it, because that is the motive. After all, if we can't make you understand, why, what are we doing here? Wasting time. And it is this cold. I know some people could have been doing some things that keep them warm. All right. So expected sales here. Expected sales, we now look at our demand in units with the projection and again the selling price, the changes that we expect from there. So I will come to 2023, put an equal sign. Then we know that sales or revenue come from units. We multiply by selling price per unit, selling price per unit. So what do? I just refer to them like that. Then at this point, you do not have to lock anything. Just refer to the demand in units and the selling price per unit and like that. Do not lock. Why are we not locking? We want to autofill that formula. So when I confirm I have my expected revenue for 2023, then I will simply autofill to 2027 like that. And when I autofill 2027, you see I have some figures there. And I need to put a comma style to make them appear in order. So comma style like that. We have the expected sales. Simple like that. Then from sales, following on the concept that we are looking at the relationship between revenue and costs. What impact does cost have on revenue? Cost reduces our revenue because we are interested in checking on our profits. Are we going to make profits or we are going to make losses? So because of that, we'll come here and start pulling out our costs that we are going to incur. We given the projections that we have, the expected changes. Now we come here from our revenue. We are going to less cost of sales. This is the same concept that you are done in financial reporting and cost of sales. We know that in published accounts, expenses are categorized. You do not, include expenses as line items. But here, we are now going to just follow the simple concept given the elements that we have. Now, you see there is administrative overheads. And then we have direct costs, direct material and direct labor. Then we have again variable. So these categories of costs, we have to follow them in some pattern. And the pattern that I would want us to use at this point is to make sure that we look at first those direct costs. Direct. Then from direct costs, we are going to get our contribution. We are following on this. How do we get contribution margin? Selling minus variable cost. So total revenue is the same sales that we have. We're going to less the total variable costs first. And when we less total variable cost, we're going to get what? Contribution margin, right? So that is the pattern we are following. Now we come here and I talk about direct. Let me start with direct material, just the way it follows there. Direct material costs, direct material costs, like that. Now, with direct material costs, we will come here under 2023 and look at what direct material costs do we have? What direct material costs do we have? Of course, I want you to look at the language here. It was written direct material cost per unit. That is very important. It is per unit. So we have to refer to our total units that we have. So I will put an equal sign, then come here. What is the direct material cost per unit? Per unit is 90, but how many units are we working with? Multiply that with the number of units. Make sure you multiply by the number of units, because these are direct material cost per unit. And for 2023, we have 50,000 units. Refer to them. Do not lock anything. Why are we not locking? That pattern, we want to maintain it and autofill across the years to 2027. So once you do the first reference, control enter, I'm having a figure of direct material cost for 2023. Then that formula, we autofill to the end and put a comma style to have your figures across. Then you put this in bold, then the years like that. So yes, I know our direct material costs have come there as positive. You can work with them as positive, or you can decide to convert and bring them as negative. There is no problem. But I'm not seeing any strong reason why we need to worry about whether it's coming as positive or negative. So long as you know the science you're dealing with and the impact it has. These are cost. What impact does a cost have on sales? You can work with either way. After the direct material, there is this other direct cost called direct labor. And again, remember, it is still per unit. It is still per unit. So members, you be keen. You be keen on such language. Once it is said per unit, multiply by the number of units. All right. Let me see. I saw somebody saying something here. Repeat on. Is this expense or something? Expected revenue. And then did get same figures. Okay, you already got it. Thank you. Angel, are you okay now? Have you seen why you are not getting same figures? Is it on sales or on the direct material costs?
Direct material cost.
Have you multiplied the direct material cost per unit by the number of units?
Yeah.
Do you have the same figures here? Is it 90 and 5,000?
Oh, sorry, I had put my cursor in selling price per unit instead of the units as seen.
Yes, so those are, thank you. So those are the things that you need to be very keen on, members. If you make that slight mistake, you lose marks. Now, we are in direct labor. I think direct labor cost, yes. Direct labor cost. And we are following the same concept, members. Remember, you are given direct labor cost per unit. You have to always ask yourself, what units are we working with? So take the cost per unit, then multiply the number of units, the same way we've done for the material. So labor per unit is this one here, that is the 200. Then I multiply that by the number of units that we're working with to get the total labor costs. We're going to get the total direct labor cost. And once you've done for the first one, do not lock anything when doing that, when referring to those cells. And once you've done that, just autofill to the end to 2027, put a comma style, and you're good. Do not lock anything because you want to autofill. Because if you lock, it will give you hard time because you'll be doing for each year separate. How long will you take? You are wasting a lot of time. Now, once we get this direct material and direct labor, now we have the elements that should give us gross, that should give us some gross profit sort of. But then how many variable costs do we still have? Let's check out. We've picked on direct labor, direct material. There is variable production overheads, variable production overheads. This is also part of this section so that we get our contribution margin. So look at the language. Variable production overheads, again, they say it is per unit. Again, they say it is per unit. So we have to refer to the units that we have. Now, let me just write the wording there. Variable production overheads, variable production overheads. We do for 2023, just put an equal sign, then refer to the variable production overheads per unit. Refer to the per unit one first, then do not lock anything, multiply by the number of units. Members, I hope you're following. Remember, forecasting in management accounting, you will most likely get the same concept like this. The only thing you need to be very careful about is when dealing with per unit, make sure you know whether you want a total or you want per unit cost. But because we are preparing our statement so that we get to see the profitability, possibility of the profitability forecast for 23, 24, all that way, you have to get the total costs for each element. Make sure you multiply the per unit cost by the number of units. That's a very important element. So once we do that for the first year, 2023, then now we follow the same. We just drag the formula to 2027 because we've already set it. It will autofill. I put a comma style and I have my variable production overheads. Now, following on this concept that we have discussed, now we can get our contribution margin. All those are variable costs. All these are variable costs. So we can come here and get our contribution
Mwalimu,
margin. Yes?
Mwalimu, there
Yes?
is another variable cost. There is another variable cost, selling and distribution.
Let me see. Selling and distribution. Fixed selling. Ah, very good. There is that, there is that variable selling and distribution. Selling and distribution. Now, very nice. You can either do it in two ways. You can do it in two ways. Now, you see, this variable selling and distribution cost, it is mostly same as you can categorize it as selling and distribution expenses. Selling and distribution expenses. Remember, in published accounts, expenses are categorized in three categories: selling and distribution, admin, and cost of sales. Yes, at some instances, you might have other expenses, but it is not always common. Now, remember, we're in the first category of costs or expenses, cost of sales. Now, when you talk about cost of sales here, look at the selling and distribution, which has been brought there. Yes, it is variable, but is it under cost of sales as a category of expenses? The answer is no. So we hold on to the idea, the concept you already have of the categories of expenses. So when we talk about cost of sales, because that is where we are starting from, let us bring selling and distribution as a separate category after this. So for this part, we will just get the gross profit equivalent. In our case now, it is margin, yes, but it is equivalent to the gross profit in published accounts. It is from gross profit that normally you come up with now the categories of expenses. You bring admin, you bring selling and distribution, or any other category. But cost of sales gives you gross profit. In our case, we will not call it gross profit, but we will call it gross contribution. They mean the same thing. We're just using different terms because now we are looking at it in a different perspective. Contribution, like that. Now let's get the gross contribution here. And the gross contribution would be our revenue. Sorry, what am I doing? I should be in bold. All right. So we already have all the costs, the cost of sales there, and we have a revenue. So we can simply do the math. And if you brought your figures in negatives, you just use your alt equals. But in our case, we did not bring them as negative. I said it is not a must. They must not appear negative. No examiner will penalize you. What the examiner is interested in is your entries. Are you getting the correct gross contribution? Are you getting the correct net contribution, equivalent net profit? Are you getting the net profit or loss correctly? That is what the examiner is interested in. But so when we go to the positive side, when we decide to bring expenses as positive, then now we have to go the longer route, the manual way. And what is the manual way? We pick the sales, we deduct these costs like that. You can either total up these costs, the cost of sales, or you can just deduct them directly the way I'm doing here. Really, no one will penalize you. You choose whichever is you're comfortable with. Once we do for the first year, 2023, then that formula, we just autofill to 2027 like that. I have gross contribution equivalent to gross profit. After getting gross profit, normally we bring the categories of expenses. In our case, the categories there, they are still remaining the same. Admin, selling and distribution, but we are starting with the variable component. The variable component, because we are looking at, getting our net contribution before we can come and bring our net contribution before we can come and bring the fixed costs later. Yes. So come here and look at variable selling and distribution. Variable selling and distribution. I hope you are seeing the slight difference in preparation of these statements in FR and now in this MA. So variable contribution, look at the language again. Do they talk about per unit or something? We look at the language here. Variable selling and distribution cost, again, they say per unit, per unit. So make sure whenever there is the word per unit, refer to the number of units. 2023, I put an equal sign. Then I pick variable selling and distribution per unit, that is 30 in 2023. I'm not typing, I'm referring. We multiply by the number of units because we want to get the total. Once we do for the first year, we just autofill to 2027 and put a comma style, and we are good to move. After that, so I again say, you can either do this, you can bring them a negative so that you use alt equals, but even if it's positive, no problem. After this, we can now get our contribution margin. You see this? It was selling price or the revenue minus total variable cost. So you see what we've gotten here? These are the total variable. If we add all these costs and all this, they somehow represent total variable. So when you less all of them from your revenue or from your sales, you're going to get your net contribution margin. Net contribution like that. And the net contribution, we get it here by just now the difference between these two. Gross contribution minus variable selling and distribution. We have the net contribution to 2027 like that. Simple. Then it is now from there that we move to the next. After getting our net contribution, now we ask ourselves, we are supposed now to go and consider the fixed costs. We now go and consider the fixed costs. What was the required? It's always good to refer to what the examiner wanted you to do. The examiner wanted us to prepare the forecast statement of profit or loss. You see, forecast statement of profit or loss. That's what the examiner wanted us to do. So in that spirit, we go to the fixed costs now. We are done with the variable. So we go to the fixed cost section. And I can just write there, less fixed costs. Less fixed costs, like that. So what are the elements of fixed costs that we have? We look at the information given. There is this one, fixed production overheads. There is fixed production overheads. And members, I want you to be careful of what is given in bracket. You see there is something written in bracket here. There is nothing like per unit when talk about fixed costs. These costs do not depend on the number of units produced. But there is thousands given there. There is thousands given there. So whenever we are going to get the totals in our statement here, we are bringing the totals, including the thousands. Now, very simple approach to make sure that all your figures are in thousands. Very simple approach. And the approach is here. Just type 1,000 anywhere, in any cell. Once you type 1,000 in any cell, go and copy it. Control C, or you right click and choose on copy. What do you do after that? Once you've chosen on your copy, or you've used Control C, then you come and highlight the range of the figures you want to multiply by their 1,000. We are looking at fixed production overheads. I will come and highlight all of them like that. Just highlight and relax. Once you've highlighted and relaxed, now go to your home tab on your Excel window. Look at the clipboard section on the top left. There is a button written paste, and then there is a down arrow, a drop down arrow below it. Click on that arrow. Then you go to the paste special section down there. Then what do you choose? You choose multiply. Multiply. We are retaining the alignment, so we are not transposing. Our figures, let them still appear in a row. So come and say, okay, you shall have multiplied all these figures by the 1,000. Do not worry about the one E written here. This one simply means the figures have a lot of zeros and they're wide. But if I click on comma style, they will all align like that. You see the zeros are so many. That's why it was writing it in the previous manner. But that should not be a problem to anybody. Should not be a problem to anybody. And Jaden is saying, please pardon, I will undo what I've done using Control Z. Yes, Control Z again, Control Z again, and I go back to the initial part. This is what we had. Now Jaden and any other person did not see. What I've done is very simple. I want you to look at fixed production overheads. There is a bracket given in thousands. You see that? Now, when dealing with fixed costs, the variation in the production units do not affect our fixed costs. But remember, if given in thousands here, make sure all these figures are in thousands. And because we need the totals here, we need to multiply 1,000 by all these figures. You can do it manually, no problem. No one will even disturb you. The only problem is you will consume quite some time. With Excel knowledge, you can multiply all of them at once by the 1,000. That's why I said type 1,000 in any cell. Go and copy it using Control C or right click and choose on copy. After you've done that, come and highlight the range of figures you want to multiply by that 1,000. Just highlight and stop there and relax. After you've highlighted, go to your home tab on your Excel window. Top left, I hope you can see my cursor. Then go to the clipboard section where it is written paste. There is a drop-down arrow. Click on it. Then there is that small window of paste, paste values, and other paste options. Below everything there is paste special. That's what I want you to click on. There is a pop-up window of paste special. What do you do with it? You want to multiply 1,000 by all those figures you've highlighted. You see the highlighting is still there and the 1,000 is still there. We've already copied it. What is remaining is for us to paste, but we are giving a condition on how to paste it. We are not just pasting it casually. We are pasting it by multiplying. So we are telling Excel, please multiply all those range of figures I've highlighted with the 1,000 I copied. We are not transposing. Transposing is changing the alignment. So what do? We go ahead and say, okay, it will multiply all of them by the 1,000. And you will see 1E plus 0.8 under 2023. That should not worry you. What Excel is doing by giving you that is because the zeros are so many. Excel is tired of giving you all those zeros. But if you want to force it to give them to you, just go and click on the comma style and it will give them to you. You see there are so many zeros. There are so many zeros there. You see, there are so many zeros there. So after you've done that, because we need the totals, we cannot avoid bringing these zeros. We cannot avoid bringing these zeros. Hey, but these other zeros are looking so many. This is crazy. Some of these zeros are so many. Some of these zeros are so many. Okay, we need to remove the E. Just click on the comma style. You see the formatting section? Just click on the comma style. Click on the comma style and you have them. Let me just undo this a bit and see. Do we have an alternative instead of multiplying all this by the... Because the sum of those zeros are so many. I don't know.
Mwalimu, you can indicate on top there, just put shillings in thousands.
No, remember, we are preparing a statement here. You see this? We're preparing a statement. And as we prepare that statement, remember our sales were all in thousands and all those costs we've not divided. So we have to find a uniform way to have them. We have to find a uniform way to have them there. Yes. So
We
we need to really,
divide by 1,000. The rest.
yes.
The others we divide by 1,000.
Okay, no worries. No worries at all. No worries at all. Okay, so members, there is also another simpler way. There is another simpler way to do it. You know what simpler way to do it? We come here and let me see. I think, let me give you this simpler way so that you don't have to really complicate a lot of things. And I think we had doubled some of our 1,000. And tunaweza ziandika tu, okay, the formula changed. Okay, you know what happens? You know what happens? What I've just realized is that when we highlighted the range and multiplied by 1,000, that's why we were seeing excess zeros at the end. So as not to go to that longer route and get correct figures, let's just refer to them. They are fixed costs. I want to refer to the one in 2023, and because they are all in thousands, why don't I just say multiply by 1,000? And because I've typed the 1,000, that 1,000 is like it is fixed or it is constant. So I will just drag to the end and it should bring me correct figures, and then I just put a comma style. You see, we were getting so many zeros because the 1,000 was doubling itself when we say we highlight everything and multiply by the 1,000. Yeah. So simple, let's just multiply directly like that and it comes well. Now, that is the first element of the fixed costs. We go and check on the other one. When we look at the other information about fixed costs, we come here and see admin expenses. Admin expenses are always fixed. So we come here, administration expenses, the overheads, also multiply by the thousands. So we come here and say admin. Did I even type the name of this fixed cost? I did not. This one was supposed to be fixed production overheads. Fixed production overheads. Fixed production overheads. Overheads, let me just write it in short like that. Then we are coming to admin overheads. So admin overheads also, I'm not typing it in full. I'm just typing like that, overheads. So the admin overheads also we are multiplying by 1,000. So let's come and refer to the first one. Multiply by 1,000 like that. We'll put a comma style to make the formatting uniform. And there you go. We've brought the admin overheads. After that, we check on any other fixed cost element. And there is this one, fixed selling and distribution, also in thousands. So I type there, fixed selling and distribution, distribution like that. We pick for 2023. We pick this one, and then because it is in thousands, we bring it in thousands like that. And we autofill to the end, put a comma style, and we are done with it. So these are all the fixed cost elements, I believe. I don't think there is any other we are leaving out. No, these are the only ones. There are only three. There is no any other. So with that, we come now and get our, this one should be to the end, yes. We now come and get the total fixed cost. We can get the totals, the total fixed costs, and the total, I'm using Alt equals for the three to get their totals here. After getting the total fixed costs, then now we can deduct our fixed costs from the net contribution. Now, when you deduct fixed costs from the net contribution, we are simply now coming to the final bit of expenses or the costs, and we are now looking at to get, do we realize a profit or a loss? So we will come here and get net. Remember, we're deducting it from net contribution. So we are going to get either net profit or net loss, like that, net profit or net loss. And that is the line closing that statement. And we say there that we are getting the difference, and the difference is the net contribution minus total fixed costs. We get the first one, I see it is coming as a loss. Then we have to fill the formula to 2027. And I'm surprised to see that all of them are losses. All of them are coming as losses, which is interesting. But because we've picked our figures correctly, I think we should not worry about the losses that we are having there. So now, members, once we've done that, we need now to ask ourselves, what next are we supposed to do? What next are we supposed to do? And we go to this other part. Have we answered part A? Prepare a forecast statement of profit or loss. Yes, part A, I think we are done with that. We should now look at part B. You can have a minute break, then we continue. A minute break, then we continue. Saying that this is a net profit or a net loss, but it is before tax. A net profit or loss, but it is also important to remember this is before tax. It is important to say it is before tax because we've not seen any tax element that we have used to compute it. All right. Now, in that case, we can now go and look at this part B of the question where we are being told, determine the break-even levels in units and revenues for each of the 5 years. I gave you a formula of break-even point in units, and we can all refer to it. Break-even in units, you see, it is total fixed costs divided by what? Contribution margin. Total fixed costs divided by contribution margin. Yes. So we can now decide on the format we want to use so that we get our break-even point in units, and maybe, just maybe, we can go the simple approach. And the simple approach is we need to get the total fixed cost, which I believe you already have. You see the total fixed cost is here. When we divide the total fixed costs by the contribution, what was this? It was contribution margin, and the contribution margin here we've not computed it. So why don't we compute the contribution margin? Let me just say here contribution. Let's do contribution, and the contribution I want us to do, let's do the contribution now per unit. We already have net contribution. You see net contribution is already here. So we can go ahead and do contribution per unit. We can do contribution per unit. And when we do contribution per unit, we refer to the number of units that is being produced or expected to be produced per year. So contribution per unit, and we come here under 2023, I pick the net contribution and divide by the number of units, which we have for 2023 is this one. I'm not locking anything. Why? Because I want us to drag to fill the formula. So once you refer to that one, we get our contribution per unit for 2023. That formula which remains the same to 2027, and we have our contributions per unit across the years like that. And once we've done that, we can now ask ourselves, yes?
Kindly repeat on that contribution per unit.
It is net contribution divided by the number of units. Number of units we had here, the projected number of units from 2023.
Okay.
Yes. So you just pick net contribution divided by the units. We have contribution per unit. Then you know very well that in these are formulas that we gave, you also need look at the break-even point in shillings, because that is also what examiner needs. Contribution, now we change it to contribution ratio. The numerator remains the same, total fixed cost, but now the denominator changes from contribution to contribution margin ratio. I also wrote how do we get contribution margin ratio? It is contribution margin divided by revenue, or total revenue minus total variable cost divided by total revenue to get contribution margin ratio. So in our case, we already have net contribution and we have our revenue. So that makes it very simple. Contribution and revenue, we just divide them and get our ratio. So we come here and say contribution margin ratio. You can write it in initials, but let me just write it in full. Contribution margin ratio. Sometimes you can just use the initial CMR. So we start with CMR for 2023, contribution margin ratio, and I've said it is just the net contribution Divide by what? Divide by the revenue or the sales. We have contribution margin ratio for 2023. Do not lock anything when you refer to those cells because we need to autofill it. So you autofill to the end 2027, and we can put comma style to bring them to 2 decimal places, all of them, because that makes it uniform like that. So once we have those two elements, those are the elements we need to get break-even point in units and break-even point in shillings. So we can go ahead and now get break-even point, BEP, in units. Remember, we are answering part B. Part A, we already done. We are answering part B, determining the break-even levels in units and revenues, right? So we are about to bag the 15 marks here. That's what we are doing section 2. Now, the units break-even point, we already have everything we need, and we just said it is the total fixed cost divided by contribution margin per unit. So we come here and refer to the total fixed cost, divide by contribution margin per unit. You see this one here, that one. Then we have our break-even point in units. Remember, this is now in units. Put a comma style to bring it to 2 decimal places like that. And there we have the units. And remember, units cannot be in decimal. Remember that. Units cannot be in decimal. So we need to do away with the decimals. Units cannot be in decimal. You don't have a decimal unit. It is either 1 or 0. So we come here and I want to autofill the formula to 2027 like that. So you pick total fixed cost divided by contribution per unit, which we have already computed there. Avoid using decimals, because we are talking about units. All right, someone is saying repeat. What I've said is we are getting break-even point in units. And how do we get it? Pick your total fixed costs, divide by contribution margin per unit, which we already computed here. I believe you understand how we computed contribution margin per unit. We just took net contribution and divided by the number of units, and we have it there. So I hope we are following. Then we go to break-even point in shillings. Break-even point in shillings, BEP. BEP in shillings. And BEP in shillings is not different. The formulas we already gave. So there is really no big deal. There is really no big deal. And in shillings now, we are going to pick the total fixed cost. Numerator remains the same in both these two formulas. Numerator remains the same. The only thing that changes is when you are dealing in units, break even in units, you're talking about contribution per unit because you are focusing on units. But when you talk about in shillings, you are looking at contribution ratio because I believe you know how we did contribution ratio. That is the revenue bit of it. So that's why we talk about in shillings, in shillings. That's how the formulas interchange. So we'll pick the usual numerator, which is fixed cost. Then what do you divide it by? You divide by the contribution margin ratio, which we computed here. And I have my break-even point in shillings. Now I can accept 2 decimal places there because it is now in shillings. So just autofill the formula to the end. And we have it there. So members, I hope we are together. Are we together, members? Are we all together there? Because that answers part B. Part B is done. Are we together there? Part B is done at that point. Are we together? Thank you, Elkista. Though Winnie is not together. Winnie, where have you lost? Where have you not gotten? Oppo, we are okay. Steve, Dama, thank you. Winnie is okay. Very nice, very nice, very nice. We move. Jaden is very okay. Thank you. Metrin is not with us. Metrin, where are you? Metrin is not with us. Metrin is not
Mwalimu,
with us.
you can repeat on contribution margin ratio.
Contribution margin ratio is just the net contribution divided by revenue or sales. Net contribution divided by revenue or sales divided by sales there. That's how we got the contribution margin ratio.
It's okay.
All right, Metrin is now okay. And I hope everyone else, we are good. Yes, you see, these formulas here, formulas for contribution per unit contribution margin ratio, break-even point in units, and in shillings. Those are the same concepts that I told you. It is non-negotiable. Under CVP analysis, you have no choice. You see these concepts, and I believe you can be able to see they are the same concept that the examiner had set in this question. These ones, the same. We've used all of them. We've used all of them, all those concepts at this point. Yes? So you have no choice. That's why I started with them, because I know that any CVP analysis question will test you on all this. So you have no choice. You just have to master these formulas. Once you've mastered them, you don't have to stress yourself so hard to look for other 10 questions testing on CVP. No, do not do that. Just understand, just do 2 questions. We've already done one here. And master the formulas. Check if there is any other way an examiner had set that the same question a different way. Then you are good. Then you are good. Yes? Yes, somebody say I scroll to the introduction part. I hope you now get the importance of these formulas that we had written, because they will help you big time. All right. So members, we look at this other section, which is part C, that is the simple remaining part. And part C is simply asking you what you already have. You see the information we've already built. They're telling us, using suitable graphs, present a summary of revenues, profits, and break-even revenues for each of the next 5 years. Look at that. Interesting. Interesting. So we already have everything. Now we want to draw graphs. How do we draw graphs? They've told us to bring in the elements of revenue. They've told us to bring the elements of the break-evens, the break-even in shillings, and they want us to now prepare a graph to represent that information. So members, what you do here is simple. Just bring on board all the elements of revenue, and let me draw some simple table here. Details are the details that they want us to bring. They want us to bring revenues, profits, and break-even revenues. That's what we'll write under details. Then, of course, the years. The years start from 23, 24, and this goes all the way to 27, like that. So I want us to use this simple table to draw our graph. And the first element of profit that I want us to bring, remember, profits in our statement of profit or loss, we normally have 2 elements. We have gross profit and net profit. In our statement here, we did net profit. Did we do gross profit? The answer is no. Is it necessary? It is an element of profit that we always need to bring on board. So we might need to get our gross profit. How do we get gross profit? If someone would ask, how do we normally get gross profit? Yes?
Excuse me, sir. Contribution here in shillings. How did we get it? Mine is
Contribution
different.
is total fixed cost divided by contribution margin ratio.
Okay, thank you.
All right. So I want us to bring the elements of profits that we have, and I was just mentioning that there are 2 elements of profits in the statement of profit or loss. Normally we have gross profit, and then we normally have net profit. Remember, what we've done here is a net profit. Do we have gross profit? This is contribution. This is not profit. So you do not confuse this gross contribution with the gross profit. It is a bit different. The reason why it is a bit different, remember, when you talk about gross profit, you cannot ignore production cost. You cannot ignore production overheads. So for us to talk about gross profit, this element here has to come in. So how does it come in? So we have to come and get our gross profit. We can either do that now, or, I don't know if the examiner might penalize if we do not bring all the profits, but it's good to bring all the profit elements. Because remember, they've told us to bring, look at the language here, they said, present a summary of revenues, profits. You see that? Profits. So when you talk about profits there, that would mean that profits, we have to bring on board all the elements. It is important. So I would want us to come here before we start with this, because I want us to start the elements of profits from, we can even start from what we already have. What is the worry? Let's come and pick on this net profit. Of course, I believe you remember it was before tax, and you know why I said before tax. Normally, tax is an important element of statement of profit or loss. In this case, we didn't have it. So it's good to note that it is before tax. There was no mention of tax. Then we just copy all the information the way they were. And of course, we know they were all losses. They were all losses. We just bring them the way they were. Then we need to bring on other element of profit in the same statement. And I know we have gross contribution. This is an element of profit. Yes. We have net contribution. It's an element of profit, but we do not have the gross profit despite having net profit. So let's get our gross profit, then bring it here. Now, how do we get gross profit? I want to do it just below here, below net profit. You see that part? Let's do it below net profit and write there gross profit. Just to make sure you are safe, the examiner do not penalize you for not bringing all the elements of profit. So let's have the gross profit there. How do we get gross profit? Usually, I want you to relate to the statement of profit or loss that you normally prepared. And usually, you just know very well, to get your gross profit, you normally start from revenue. And revenue is always the basis because that is the sales. So we pick on the sales. Then after you pick on sales, you pick on those cost elements, especially cost of sales. You know, cost of sales is normally deducted from your sales to give you the gross profit, right? So these direct ones first, we pick on the direct ones: direct material, direct labor, direct variable production overheads. And once we do that, we have to make sure whenever you talk about gross profit, do not forget production cost. It normally forms part of the same. Even though it is a fixed cost in this categorization, but it is an important element for you to get your gross profit. The gross profit that we normally know in the published accounts or in the statement of profit or loss in FR. So to do that, I think we have to deduct that. Then I think we've covered everything, that all the elements we need. Admin overheads, no. That will not give us gross profit. That will come after gross profit to get the net profit. All right. So I'm getting a gross profit for year one as negative 91. I will highlight, I will drag the formula to cover to 2027. And I have the
Manimo,
figures there. Yes.
can you repeat the gross profit, please?
I said we start with sales or the revenue. Then you deduct the cost of sales. That is material cost, labor, production overheads. Yes. So production overheads is in two parts. There is the variable part and the fixed part. So you deduct both of them. You start with the variable, then you also deduct the fixed. That totals up to cost of sales. We deduct all that from sales, we get our gross profit. That's how I got the gross profit, and I hope you have the same. I hope you have the same. All right. So now, after getting our gross profit, let's bring it here as an element of profit here. So I will just refer to the gross profit, then I will drag to bring those figures here like that. We have them. Then after doing that, then now we bring the break-evens. We are told also to bring the break-evens. So we start with the break-even in shillings, the break-even revenues. They did not tell us to bring the contribution by the break-even in units. It is in shillings. So that is what I need to bring here. They said it here that break-even revenues. They didn't say break-even units. It is revenues only. So elements of profits are there. Break-even revenues we've brought. Now, summary of revenues. What do we mean by summary of revenues? There is a profit element that I mentioned that I have not brought in. That is, there is this gross contribution. There is gross contribution, and then there is net contribution. So gross contribution is there. Then there is net contribution. Then when we talk about elements of revenue, that is just the sales. You see what they talked about, summary of revenues. So those revenues are there. Then of course, the backbone of it all is the sales. We can call it sales or you can call it revenues. You still have the same. So these are the elements that we need to present in a graph or in a chart. Yes. Gross profit. Winnie wants to see gross profit. Winnie, gross profit is here. I said gross profit, you start with revenues, then you less the cost of sales from material cost, direct labor, variable cost. And variable costs are in 2 bits. That is the variable one. Production costs are in 2 bits. The variable section and the fixed, you bring all of them. You deduct all of them from sales to get your gross profit. I hope you've seen it, Winnie. Good. So after we've brought that, now we can draw a graph. We can draw a graph now. And we have all the figures from 23 to 27. So we can insert a graph because that's what the examiner told us here. That now using suitable graphs, now we present. Now, we have all those figures. Gross contributions was in our statement. You did see this one here. So we have gross contribution. Here it is. So let us insert our graph. So to insert our graph, normally you need to highlight the range of data that you need to present. Go to insert. Go to insert. Then under the chart section, click on this arrow to give you all the charts. Then of course, Excel will always give you the recommended ones. It will recommend for you charts, but it does not mean you have to use the recommended charts. You check which charts will present your information the best way possible. Yes, so you check which one will present it the best way possible. They've given us a recommendation of clustered bar. And the clustered bar is giving us, in the y-axis, we have the expected sales net contribution, and then in the x-axis, we have the years. Look at the alignment, how it appears. You can check on the next one, check on the next one. So you can see there is this line graph here, and the line here will represent break-even in shillings. Then we also have this stacked column. We have stacked column again. So you can always choose which one do you think presents your information best. Which one do you think presents your information best? This one presents it in a very interesting way. I'm looking at this one here, clustered column. I'm seeing, you see the blue ones, these are net profits or loss. Or because we have losses, that's why they're going below. And I think, let me read a description here. They say, clustered column chart is used to compare values across a few categories. Use it when the order of category is not important. In this case, the order was not very important. The examiner just wanted us to present these elements in a chart. But now, members, there is something I'd mentioned before, and I will still say, whenever you are told to present your charts or to insert a graph, it is not cast on stone. This one simply tests on your own understanding and your judgment, which chart will truly present the information you want to present the best way possible. And you need to know the type of chart and what category of data it normally represents best. Remember here, we're dealing with values. You see the values here. When dealing with values, columns using the clustered column charts, either you can call it clustered column or sometimes they call it, you see this other category. Let's see all this. There's clustered column, stacked column. You can call it 100% stacked. So long as it is a column chart, columns are normally best to represent values because it will show you the variations in the values. And when you are looking at a trend, then line graphs are always best. And line graphs also have their own types. You see there is line, there is stacked line, there is 100% stacked line, there is this line with markers. So there are various categories, but the baseline is these are line graphs. Pie charts are normally best to represent a portion of a whole, portion of a whole, portion of a whole. Once you have that rough idea at the back of your mind, then you need to always have a good judgment on which chart to best represent your data. Of course, you cannot pick on this or on this chart. Let's say, for example, the pie chart or the 3D pie, or this other one called the pie of pie, this other one called the bar of pie, this one called the donut. For example, now, how do you represent this information using a donut? How? To you, will it even make sense? Look at it. Look at the way it appears. I mean, no one will understand this information, members. You are presenting profit figures and someone wants to see a trend. In which year is the profit where? Do we have a loss or a profit? What shows the variations? If you choose something like this donut here, it will not give anybody meaning to whatever you're presenting. So this basically relies on your judgment. So your judgment should really present the information. But the examiner will not even tell you which chart to use. Look at the language. They just said using graphs and charts. Present the information. They only tell you what to present. You get that? So your judgment will play a role. So someone who wants to go and choose this donut, it's okay. Choose the donut. Let me choose the donut and see. Now, to you, assuming someone presents you such an information, what are you supposed to understand from here? What are you supposed to understand from here? Can you even really see anything to understand here? You cannot. Members, you cannot. So that's why your judgment, they will not tell you which one to use, but your judgment plays a role. And you need to look at the type of data you're presenting. That's why whenever you come to the chart section, normally they give you a brief description. And that brief description is what should guide you. Look at the recommended ones. They will give you a description that this one presents a data that has this and this. They will always give you a description. They will always do that so that it guides you. Now look at something like this, a funnel. How do you want to even give someone a funnel to explain this data, the type of data that we have? Now look at this thing. Even to you as a person, assuming someone gives you something like this, they were given freedom to choose whichever chart they want. They've given you this one now. What are you supposed to understand from this thing? You see? So charts and presentation of dashboards rely a lot on your judgment as a person because you want someone to understand your information. So we choose a chart that can really present it. So someone gives something like this, I mean, even an examiner will just laugh and then say that this person really, can you even understand this? Yeah? So let me just do away with those ones. And we go again to the chart section, insert, go to chart. And always, recommended charts are always closer, but does not mean you have to choose any of them. Now look at this, stacked area. Now, how do you even want to compare? It is not a wrong chart, but does it display the relationship very well? Does it display the information correctly? It will be difficult. But if someone picks on this, for example, and even presents it to you as a person, you can have some rough idea because you can see very well that, we have figures. We have the years here. Even though it does not look very nice, but it can be twisted a bit. How can it be twisted? You can always change the alignment of the axis if you are not comfortable with it. How do you do that? You can go to select data and see the alignment on the x-axis and on the y-axis. You can see in our chart that we have, the years are appearing on the x-axis, which I believe should be okay. Then look at the y-axis. Is there something that we don't want to appear in the y-axis? Yes, from these elements that we have. You see, from the elements that we have, I think these elements are the elements of profits. And again, the break-even in shillings or in revenues that we have. So really, we don't have to change anything here. We just leave it as is. Yes? Even though these figures will come with an E. You see the E's that are here. This simply means there are zeros that have been hidden because the size here, it was not enough for them to give you all the figures in zeros. And it is all these figures. You see these ones. But the most important thing in this chart is for you to see the variation. And in 2023, you can tell that net profit, there is a net loss. This, you see the blue one. I guess this is blue. I'm not sure, but I'm just guessing this is blue. Ladies, you'll forgive me. You'll see that it is a negative. Yes, and you can choose another design. Designs of these charts, you'll come to the chart design and see. You can choose whichever alignment. If you want to follow up on the decimals, or maybe you want to choose another way it appears, you can choose on any of them. So long as you feel that your information is well presented. Now look at this. Now you see this one. It's an interesting one, right? Yes. Someone can even choose this. You are okay. Because this one now even writes for you the figures. Yes? So this one is understandable. Someone will see that in 2023, we had this here, negative 233, and that was the blue one. And what does the blue represent? The blue will now represent the net profit. You see, it is written here. You go to the red represents what? Gross profit. You and the figure is even written. So you can choose whichever chart, so long as your instincts are convinced that it represents your data correctly. Someone can like another design. You can go and choose another design, for example, this one. Yes? And you can come up with it. Now, the most important thing when you come to charts, make sure that whenever you talk about charts, you be able to name and label your access. That is very important. But the design really depends on your judgment as a person. Which one do you think or do you feel best represents your data? Yes, you have several designs. You have several of them, several options to choose from. And whatever you choose is up to you. So long as you are convinced that someone will understand your information very well. So members, I hope that makes sense. And for me, I don't know which one I'll settle on. Let me see. I can even choose, let me go back a bit. I can even leave it at this one. Or let me see. I want this one with a graphical appearance. Yes, I can leave it at that. I can leave it at this. Then what I do, I just expand my chart a bit so that it appears, I can just expand it so that it appears big enough, like that. Like that. Then now what do? I will come and now label the axis. And how do you label the axis? Once you click on your chart, there is this plus button. Click on it and then you say access titles, so that you name your access. You name your access. And most importantly, you see there is the chart title, and the chart title will relate to what the examiner asked you. Now you can see here, the examiner asked you to do graphs presenting summary of revenues. So this one already can give you the title. You can say graph presenting summary of revenues, profits, and break-even revenues. So that is where you get your name of the title. You can just say graph presenting revenues, profits, and break-even revenue. Like that. Break-even revenue. For the years, you can even go ahead and say for the years 2023 to 2027. I mean, whatever way you want to describe that title, so long as it shows what you've really presented, the examiner will give it to you. It is not cast on stone. This one, in this area, again, you're also flexible. So, but make sure you give the title, and again, the axis. Look at the axis here. I want you to look at the x-axis. The x-axis simply shows the years. The years. These are just years. Because that's where we have the years 23, 24, 25, 26, and all that. Then the y-axis. The y-axis represent amounts, or you can call it revenue stroke profits. Revenue stroke profits, like that. Because we have both revenue, because you remember, we brought in our break-even in revenues, and again, we have profit elements. You have the gross profit, net profit, we have net contribution, we have sales. So sales also falls under revenue. So you can say revenue and profits, or revenue stroke profits. So long as you've labeled it and represents what you've done, then you are good to go, members. I hope that is all you are required to do to get yourself the 20 marks. So you will see that the 20 marks here is not hard to get. The only thing is you have to build your information, summarize the way you've done, then now you can go ahead and insert a graph that you feel is suitable to present the information. Members, does someone have a question?